Let's see how this works in real trading. We select the Euro-British pound pair and open it on the platform, precisely on 3 candles. It also works well on this currency pair. And after the breakout, there was an increase. Here's another situation, oversold condition according to CCI and the crossing of the lower band. Hello everyone, I'm glad you tuned into this episode. My name is Mary and I'm your personal trader. Today we will talk about Bollinger Bands, what they are and what they tell investors. If you want to participate in trading session with me and receive signals from me, then subscribe to my Telegram channel. The link is in the description. A Bollinger Band is a technical analysis tool defined by a set of trend lines. They are plotted as 2 standard deviations, both positively and negatively away from a simple moving average SMA of a security's price and can be adjusted to user preferences. Bollinger Bands was developed by a technical trader, John Bollinger, and designed to give investors a higher probability of identifying when an asset is oversold or overbought. In the trading systems of many traders, you can find a specially selected set of indicators. Many of them were created by successful economists who, thanks to their developments, have created their own hedge funds and became millionaires. One of the most famous ones is Bollinger Bands. How to calculate Bollinger Bands? The first step in calculating Bollinger Bands is to compute the simple moving average of the security, typically using a 20-day SMA. A 20-day SMA averages the closing prices for the first 20 days as the first data point. The next data point drops the earliest price, adds the price on day 21 and takes the next average, and so on. Next, the standard deviation of the security price will be obtained. Standard deviation is a mathematical measurement of average variance and features prominently in statistics, economics, accounting, and finance. For a given data set, the standard deviation measures how far numbers are from the average value. Standard deviation can be calculated by taking the square root of the variance, which itself is the average of the squared differences of the mean. Next, multiply the standard deviation value by 2 and both add and subtract that amount from each point along the SMA. Those produce the upper and lower bands. What do Bollinger Bands tell you? Bollinger Bands is a popular technique. Many traders believe the closer the prices move to the upper band, the more overbought the market is, and the closer the prices move to the lower band, the more oversold the market is. John Bollinger has a set of 22 rules to follow when using the bands as a trading system. The squeeze. The squeeze is a central concept of Bollinger Bands. When the bands come close together, constricting the moving average, it is called squeeze. A squeeze signals a period of low volatility and considered by traders to be a potential sign of future increased volatility and possible trading opportunities. Conversely, the wider apart the bands move, the more likely the chance of a decrease in volatility and the greater the possibility of exiting a trade. Those conditions are not trading signals. The bands do not indicate when the change may take place or in which direction the price could move. Breakouts. Approximately 90% of price action occurs between the 2 bands. Any breakout above or below the band is significant. The breakout is not a trading signal, and many investors mistake that when the price hits or exceeds one of the bands as a signal to buy or sell. Breakouts provide no clue as to the direction and extent of the future price movement. On this image, Bollinger Bands bracket the 20-day SMA of the stock with an upper and lower band along with the daily movements of the stock price. Because the standard deviation is a measure of volatility, when the market becomes more volatile, the bands widen. During less volatile periods, the bands contract. Limitations of Bollinger Bands. Bollinger Bands is not a standalone trading system, but just one indicator designed to provide traders with information regarding price volatility. John Bollinger suggests using them with 2 or 3 other non-correlated indicators that provide more direct market signals and indicator based on different types of data. Some of his favorite technical techniques are moving average divergence, convergence, MACD, on-balance volume, and relative strength index, RSI. Because Bollinger Bands are computed from a simple moving average, they weigh older price data the same as the most recent, meaning that new information may be diluted by outdated data. Also, the use of 20-day SMA and 2 standard deviations is a bit arbitrary and may not work for everyone in every situation. Traders should adjust their SMA and standard deviation assumptions accordingly and monitor them. What do Bollinger Bands tell you? Bollinger Bands give traders an idea of where the market is moving based on prices. It involves the use of 3 bands, one for the upper level, another for the lower level, and the third for the moving average. When the price moves closer to the upper band, it indicates that the market can be overbought. Conversely, the market may be oversold when prices end up moving closer to the lower bottom of the band. Which indicators work best with Bollinger Bands? Many technical indicators work best in conjunction with other ones. Bollinger Bands are often used along with the relative strength indicator, RSI, as well as the bandwidth indicator, which is the measure of the width of the bands relative to the middle band. Traders use bandwidths to find Bollinger squeezes. Let's see how this works in real trading. We select the Euro-British Pound pair and open it on the platform. We find our Euro-British Pound pair and enter a trade for $300 with 3-minute duration on an upward movement. Now, let me explain how Bollinger Bands work and where to look for confirmations. Firstly, it's clearly visible on the chart that several red candles cross the lower band over a 20-candle period. Overall, the first signal is confirmed. Secondly, we look at the commodity channel index. With a 40-bar period, we notice that it starts entering oversold territory at the level of minus 46, the second signal. In general, we can buy when the CCI is below 100 points and the price crosses the lower Bollinger Band. Both conditions are currently observed on the chart, so I open the trade for 3 candles. If you're trading on a 1-minute time frame, open it for 3 minutes. And if you're trading on a 5-minute time frame, open it for 15 minutes. In general, 3 candles ahead because this strategy works well. Precisely on 3 candles, it also works well on this currency pair. For example, look at this situation where a bearish candle crosses the lower Bollinger Band with a negative CCI. It's exactly the same as now. And after the breakout, there was an increase. Here's another situation, oversold condition according to CCI and the crossing of the lower band. The price also increased, and our trade is exactly the same. A red candle crossed the lower Bollinger Band, the indicator entered oversold territory according to CCI, and consequently, the price should now go up. So we just wait for it to finish. Well, there you go. The trade confidently closed with a profit of $576. There wasn't a single moment when I doubted it. You can test it on charts, but make sure to use only 3 candles. If the time frame is 1 minute, enter for 3 minutes. If the time frame is 5 minutes, enter for 15 minutes. Exactly 3 candles. Not 2, not 4, not 5, but exactly 3. It works great on 3 candles. Right now, the first candle has started and the trade would most likely close at a loss of that candle. So, 3 candles. Not less, not more. Moreover, Bollinger Bands are considered one of the most effective indicators for binary trading. The indicator performs best on 5-minute and 15-minute time frames. You can use it on the 1-minute time frame as well, but always compare the indicator's readings with larger time frames. If you spot an opportunity on the 1-minute time frame, switch to the 15-minute and 30-minute time frames, assess the situation, and then switch back. This also applies when using other indicators. As for me, Bollinger Bands are in my personal top 3. However, it's not a magical money button because other factors come into play such as experience, volatility of currency pairs, the impact of news, and more. Thank you for your attention. I look forward to your subscription to the channel. Don't miss the new episodes. I hope you find it interesting to follow along because it's interesting, right? Write in the comments, please.